Hi, I'm Peter Rose, founder of Longwood Currency Trading. An interesting Forex trade that didn't go anywhere. A short story of gloom and doom. I'm out here, it's January of 2025. It's cold, and as you can see from my wood stacking routines, you know where I'm going later this afternoon? I'm going to go haul some wood in for the wood stove. In the meantime, let's go inside and we'll chat about interesting trades that don't go anywhere. But first, we have to get some coffee. That's what this is. We'll go into the kitchen because it's a bright sunny day and it'll be nice to chat in there. Okay, well, the interesting story of the Forex trade that didn't go anywhere. It was price action. It was a morning trade that I got involved in. Get up, turn the trading platform on, get a cup of coffee, you know, that kind of thing, and look at the trading play. Is there anything going on? Well, there's nothing going on right now, but it looks like there might be some setups and stuff. Went and got some breakfast, came in, and price is starting to move. I'm looking at the Dixie to see what the general USD scenario is doing, what's happening, because that kind of drives all the markets anyway, as taking in some of the major pairs to figure out what the dollar index is, and looking at the releases for any economic news that's going to come out, as far as not news, but data releases like an NFP or a producer price index or something like that. Nothing like that going on. So we've just got price that has been in motion in a certain direction. This would be in an upward direction for a few days, but just gradual type movement. And it looked like there was some building interest from the order flow that was beginning to manifest itself in the ATR from early morning London open time to where I'm getting up in the morning in the East Coast and looking at this stuff at 7 o'clock in the morning. Yeah, it looks like there's something going on here. So I put a limit order in. I did my analysis. I've got a rule for this stuff. So I did my analysis. Yeah, this is going to go. It's going to be a creeper, but it'll do something for the day. I don't have to think too much about it. So I put the limit order in and had some coffee and responding to some emails. Thank you guys for sending some emails and asking some intelligent questions. It's always fun to communicate with you. So I'm watching the trading platform, and boom, my limit goes off. It's just a small order, one lot, just as a feeler, because I'm not really sure that I want to do a commit. So it's going in my favor a little bit. Well, let's throw another lot in there. So I throw another lot in there. Well, it's just kind of hanging out. This is over 20-minute period of time or so. And it's staggering around a little bit. And then all of a sudden, it drops 5 pips. So I'm underwater, I don't know, a pip or 2 pips. I'm not going to worry about that. Drops another 5 pips. So now I'm 4 underwater. And there are certain things that I watch for, and they're not really supporting this thing moving in any great direction. So I closed it out, and so I lost some money on that. Not very much, but 20 bucks a pip. So I'm watching this thing, and it goes, about another 5 or 8 pips, and then turns around and jumps 8 pips. Then it jumps another 4. So, well, this is interesting. Maybe I'll set a limit above where I had the other limit, and if it continues on, well, then I'll have a runner going. And it hit. It didn't take long for that limit to hit. Again, it's just a single lot order. And it goes up a little bit, and then it flutters, and it comes back down, and then it goes back up, and then it comes down, and then it goes back up, and I go, maybe I'm a little early, so I'll cut this. And I think I made 3 or 4 pips on the single lot. Okay. So I'm waiting. The thing continues to go up. It passes my previous entry point and continues on moving in the right direction. Not with a whole lot of conviction, but enough. So I'll throw that order back in again. Why am I doing this? I should just go read a book. I don't know. But that's appears to be what's happening today. The thing turned around, went against me. I stayed with it. I did a negative ad, and the thing is still going against me. I'm a few pips up, few pips out on an average position. I'm not going to get excited about that. It goes up. I'm 6 pips ahead on the average position. I'm thinking about adding another one, and it turns around and goes back, and I just cut it at my average position value. So I'm zero process for that particular trade. Have you ever had that happen to you? Are you able to get in and out of position when you don't feel it's right, or you feel that it's right? I'm not talking about doing an anticipatory trade. I wasn't saying, oh, I think the thing is going to go here, and so I'm going to go in now. I think the thing is going to go here, but it's got to prove itself, and I'll go in at this point. That's not an anticipatory trade. That's setting a limit order for a move that you have a high expectation from a probabilistic standpoint that it's going to go. But my point is, in that instance, we're doing scalping because we're scalping around in about an 8 pip, 10 pip range of motion for this particular, I'm on a 5-minute chart. So I went through, let me see, 4, 5, 6 bars to do all this stuff, 8 bars. And I go, you know, this is silly. 40 minutes an hour, and I'm going to close it out negative for the day. But the point is that when you're trading small, you have no fear of getting out and taking that small loss. In the big picture of things, as you increase your lot size, and let's say you've got 5 lots that you're trading, you're 5 lots in, and that position goes 3 pips against you, what are you thinking? You're thinking, well, it's only 3 pips, and it'll come back and go in the direction that I thought it was going to go in, and all of a sudden it's 8 pips down, and you'll go, well, I got a 10 pip stop, I'll be okay. Maybe I ought to take that 10 pip stop and give it a little more room. I'll go to 15 pips, and sure enough, price drops to 15 pips, and you get creamed. Well, why doesn't that happen when you're trading a 1 lot? It doesn't happen because $100 loss, dollar-wise, it's 10 pips, regardless of the situation that you're in. 10 pips on a 5 lot is $500, or on that, and then on a 1 lot it's it's 100. So the 100 isn't very much. The 500 is. So you have a fear of hanging on to that $500 loss and letting that go to, geez. I've done that, and I've lost thousands thinking it's going to come back. Instead of saying, oh, it's just $500 in relationship to the size of the actual bank that I have. I mean, to me, the $500 is similar to the $100 loss that you might be taking if you're trading a 1 lot, or maybe you've got a 3 lot capability and you just go in with 1 lot and it's $100 and it's not a lot of money, so you get out. So when you have a capability of trading 10 lots, say, taking a $500 loss on a 1, that's not a big deal, but it's still $500. And it's the $500 that screws you up instead of the looking at the pip situation. Price action is based on pips, not on dollars. You may make dollars off the pips, but the market price action doesn't give a shit about how big your position is. As retail traders, we're just shit dust in the big picture of order flow. And so for you to think you're going to go in there with, I've gone in there with 20 and 25 lot positions. They get taken right away. The liquidity is massive. So the market doesn't care about you. Only you can care about you. And if you care about the dollars, you're going to be in big trouble. Because when you're carrying a larger size and it starts to go against you in a negative sense, your instinct is not to get out. Your instinct is to hold on. Whereas if you have a small lot size and it goes against you, you go, I must have been wrong. Boom, and I'm out. Why? What's that difference? Well, I'll let you do the psychological research on that because I'm not interested in having a psychological channel, a philosophical channel. This is practical trading advice for the day trader, in that we'll talk about processes and things that I've gone through so that you can kind of see that the stuff that you're going through is the same as what everybody's going through, and that some people are successful. Why are they successful? And maybe you're not as successful as you would like to be. And I would hazard an opinion that those that aren't successful really don't have a process. They may be following a system, which I think is crazy, or they may be looking at some, I don't even want to say indicators, or whatever it is that is being used as a surrogate for actual trading expertise, that the dollar values blind you because that's what you're focused on. You're focused on the Lambo, or you're focused on paying the light bill for the month, or whatever the value of the goal is that you have overall. Look, if you could make $50 a day on a one lot, you do that. 200 trading days a year is your $50 adds up. The problem is that we have a tendency to make grandiose projections as to what we need to make from our trading. My problem at 75 years of age is that I don't have a whole lot of years to sit around and wait for compounding and all that stuff to take effect. And so I tend to push it harder than I would advise other people to do, even the folks that are my age. I've got quite a few in their 50s and that are chatting with me. And I would never advise them to push it just because they're short of time. There's different ways that you approach advising someone that's 50 or 60 or like I am, 70 years of age, in the process that they use, the methodology that they use, which is driven by the process to trade, as opposed to how maybe someone who's 30 years old or 22 years old is going to look at the spectrum of their trading life, that they're going to be able to do stuff. It's a matter of determining your personal attachment to the dollars. We're all going to be attached to the dollars, but you need to know how much that affects you. If losing $500, if you're trading a one lot, and if losing $500 or $600 is going to make you crazy, in the end, after you close it out, and you're going to go, I lost $500. Why did I do that? Then you should be you have to put that out of your head and trade by pips. And it isn't, the pips isn't based on your dollar fear. You can say, oh, if I lose 20 pips in a day, I'm going to lose $500. No, it's what does your trading plan call for the establishment of the guidelines for profit targets. It has nothing to do with you. The market doesn't give a shit that you want to make $200 a day or $2,000 a day. It doesn't care. It's not going to cooperate with you. So you have to look at the market and what the market order flow is and understand that order flow and understand trading, which is the preeminent skill that you need to have. And then you look at order flow, because order flow is different in stocks and commodities and derivatives and currencies and old tires and your real estate and all that stuff. So you look at the order flow as it's specific to the market that we trade, the currency market. And you look at the time frame chart that you're trading on, and you say, I've got 2 hours a day to trade before I go to work, or I have an hour. I've got an hour in the morning and I got an hour at night when I come home. Okay, well, let's set that trading plan up. And this is what I do to help people. How do you, it's just not trading, it's setting up the trading plan. How are you going to trade if you don't have a trading plan? First, you understand trading, and then you can build a trading plan for the market, the currency pair, and the time frame chart that you're going to be trading on. You can build a trading plan for that. But each thing has to come sequentially in order to build a base. Each thing that you learn strengthens and widens that base, such that when you get all the way to the stuff that you know, and you've got your trading plan, and you've got a good win-to-loss ratio and all that sort of stuff, it's at that point that you're going to say, I'm doing really good with a couple of lots here. Let's shoot the potatoes and go for it. Let's sell that building that I've got, or my truck, or whatever it is. Let's throw another $20,000 into the bank, or let's throw another $100,000 into the bank, and let's be replicatable with the trading plan that I've been using at the 2 and 3 lot level. Once you throw big money in your account, and you have dollar signs in your eyes, you'll go on tilt, and you'll lose. Instead of losing, like if you're trading a 1 lot, you take a 10 pip loss, and okay, that's okay. But now you're trading 8 lots, and that 10 pip loss is $800. But because you don't really understand the market dynamics that you're involved in, and your psychological reaction to that $800, you have more of fear of loss than you have the desire to win, and you're afraid of losing. You don't want to lose, and you hang on to that, and all of a sudden you're looking at a $3,000, $4,000, $5,000 loss. I've been there. I know that. Now, in my case, it's a little bit more severe because I came out of 40 years of real estate investment, where certain risk management rules are ingrained in my DNA, and they're contradictive to what I need to do in the currency market. And it's very difficult for me to break out of that. But correspondingly, it's very easy for me to talk with someone through email and say, man, I just don't think you should trade currencies, because you're so much ingrained in this particular skill thing that you have, which has a risk management profile of this, and that ain't going to match with this. Now, I can show you what those differences are, but it's up to the individual person's psychological makeup as to whether they're going to be able to shift. It's like an artist. You're a charcoal artist, drawing with charcoal, and then all of a sudden you're going to go in and you're going to paint with oils. I mean, you're going to have to change your whole mindset about how you're applying the medium onto the paper. And if you can't do that, how are you going to be successful transferring from charcoal to oil? How are you going to be successful transferring your knowledge base and experience and all that stuff, 1, 2, 3, or 4 lots, and all of a sudden you've got a 20-lot position capable bank, and you haven't dealt with these dollar value things. Your trading plan is based on dollars. I need to make, now that I'm making $50 a day on this on my 2-lot position, and so now I've got a 15-lot position, and I need to make $3,000 a day, or whatever it is. And the dollars are driving your trading. You can't let that happen. This is like that interesting Forex trade that didn't go anywhere for me the other day. It wasn't going to go anywhere, so why be in the game? Why be in the pool? The pool's cold. Why should I be there? Because I'm going to get out. I tried it a few times. I lost a little bit of money in the end result, but that's all it was a little bit of money. If I would have been in there with a 10 or a 20 lot, what would the outcome for you have been in that situation? Well, proportionally, you would have lost, instead of I lost, I think, $100 or something like that overall those trades. Maybe you're looking at a $3,000 loss. Proportional to the bank, it's nothing. But how did that come out as pips? How many pips did you lose overall? That's really what you have to build your trading plan against. You have to build it against pips, because you never know what your bank size is going to be. You never know what part of that bank size you're going to be trading. If you're a 10 or a 20 lot trader, you may not decide you want to trade 10 lots today because of the market. Maybe you're down trading 2 lots or 5 lots. So now if you're thinking about dollars, how do you change your gearing your mind up, and you say, well, I'm trying to make $600 a day because I'm trading up here, but all of a sudden now I'm down trading a 2 lot, and how do you translate the dollars down? Because now when you lose a little, that's all it is a little, but in proportion to what you're putting at risk, it's a lot. So how do you beat that? You beat it by trading by pips. That's the first thing that I demand of someone who's I'm going to communicate with via email. There's a lot of folks that email me that I say, look, I can't help you, because I just know that they're not either serious about the currency market, and I'm not going to waste my time. Why should I? I'm not in the fucking entertainment business. I'm in the educational business. So if you just want to shoot the shit, go send an email to Mr. Beast, but don't do it to me. If you want to talk about currencies seriously, and you're seriously interested in getting involved in them, or you have been involved in them for a while, I'd be happy to spend as much time as you need with me, until you get to the point where you say, I need help trading. Not just solving individual problems, but I need help trading. Great, I got a course, I'll work with you for a month or 3 months, whatever you need on as far as the coursework goes. Because it's a course, but it's my time. I don't send a document to you and refer you to a bunch of videos. The document does refer you to videos and stuff, but there's consulting that goes with that. How do you learn something without having a teacher or a mentor or somebody behind the text of a document? You can't. That's not the educational process. And so if you want to be in a position where you say, geez, I had an interesting Forex trade that didn't go anywhere, and smile about it because you didn't lose very many pips, that's great. But if you say, oh, I didn't lose very many dollars, man, that's a warning sign to me. And you need to change the way that you think. As my karate master, I've been in karate since 1968, the only way you can change who you are into who you would like to become is to alter the way that you think, because you are a product of the way that you think, and thoughts are things. The way that you think in your trading, you have to understand the differential between thinking and trading plan pip-oriented or dollar-based goals. If you're going to do it dollar-based goals, your potential for success is minimal. If you switch and you can change your thought process to thinking about pips, you will be successful. You might need a little guidance along there, but I was working with somebody, it was 3 or 4 months ago, and he just kept insisting on talking about advanced stuff. He's been trading for a while, but all he wanted to talk about advanced stuff, but he didn't know the basics. He didn't know the fundamentals. He wasn't trading by pips. He was saying, "Oh, I'm trying to make $300 a day, $200 a day." Well, first of all, your bank isn't big enough to do that, and your leverage is too high. So put that out of your head. Now let's talk about pips. Well, yeah, but I got to make 12 pips a day, 15 pips a day. Really? How are you going to do that? Well, no, you don't know. So you're trying to make 15 pips a day so you can make $300. That's totally wrong. You might make $300, but you're trying to make 15 pips. The dollar value has to get out of it. It really does. And if you can do that, you can be successful and have a joke that you had an interesting Forex trade that just didn't go anywhere. And now I got to go and haul a couple of carts of wood for the wood stove. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.